So we're now going to go through and look at our comprehensive example. Okay, and this is going to be our T account setup. So let's go to the Google Sheets and let's come right over here. So, okay, setup. Okay, so I went through the last video. I kind of walked you through the question. Now we're just going to go ahead and put the values into the T account. The ending raw materials as of 12/31/23 becomes my beginning for 2024. So my beginning raw materials inventory is going to be at 70. My ending raw materials inventory is going to be at 85. Remember, inventory is an asset. This is a debit, this is a credit, right? So over here, I show increases, or inventory typically has as an asset, it's going to have debit balances. So this is why I'm putting this over here. Work in process. Okay, so over here for my work in process, I have my beginning work in process account that is at 100. My ending work in process account is over here at 20. Okay. My next one over here is my finished goods inventory. 12/31/23 becomes 1/1/24. So over here, my beginning over here is 168. My ending is going to be at 44. Okay, so let me just take a moment. I'm just going to color code these real quick so we can look at them a little bit easier. Okay, the coloring book went right ahead. Okay, so next one over here, raw materials purchase. Where does that go? Well, that's going to go into raw materials inventory. If this is somewhat confusing to you, or if I'm going too quickly, please take a look at the other videos that I've done. I have a whole walkthrough in terms of how I went through and did this. We're now in problem time and we're setting it up. So my raw material purchases is going to go right over here at 700. Now, my total factory payroll is over here at 500. Remember, this is made up of two parts. Right over here, it's going to be direct labor, and it's going to be indirect labor. Okay, my direct labor is 440. Okay, I don't know what my indirect labor is yet, but we're going to solve that on the next video. Ooh, suspense. Okay, over here, insurance expense corporate. Okay. Where is this going to go? Okay, so for the insurance expense corporate, this is going to be a part of SG&A. It doesn't have the word factory in it. So my insurance expense factory, though, this is going to be insurance expense factory. And this over here is going to be at 47. Sales is sales. Sales commissions is going to be part of SG&A. Delivery cost. Now, I threw this one in there because this is a really, really messed up question, because you think that, oh, it's got to be a part of factory. No. It's a selling expense. If I'm shipping the inventory to my customer, it's going to be part of SG&A. It's going to be a selling expense. My depreciation expense on office equipment, that's also going to be selling general and administrative. My depreciation expense on factory equipment's got the word factory, so it's got to be a part of factory overhead. So my depreciation expense on the factory equipment is going to be 115. Okay, so we'll just say FOH, factory overhead, factory overhead. This indirect labor is eventually going to go to factory overhead, and let's keep going. So my cleaning services, corporate office, this is going to be SG&A. Okay, my cleaning services, though, for the factory is 48. This is, oh, it's got the word factory in it. So this is going to be a part of factory overhead. So my cleaning services for the factory of 48, this is going to be a part of factory overhead. Sales salaries, SG&A, right? It's not related production. It is a period cost. Executive salaries, this is going to be SG&A. Accounting staff salaries, SG&A. Now, if it said accounting staff salaries factory, then we might have a different question, but it doesn't. Utilities cost factory. Ooh, has the word factory in it. So this is going to be factory overhead, and this is going to be utilities cost of 79. Okay. So utilities cost, corporate office, this is going to be SG&A. Production supplies used in the factory. Now, the reason why I also put this one in here is that sometimes you might just see production supplies. But to me, what this means is that if it's being used in production, it's got to go into factory overhead. So over here, my production supplies is going to be at 38. Okay, so this is factory overhead. Supplies used in the office, well, that's going to be SG&A. Property tax expense factory. Ooh, it's got the word factory in it. So this is going to be factory overhead. So this over here is going to be at 20. Property tax expense corporate, this is going to be SG&A. And the income tax rate is what we're going to be using to compute this on our income tax expense. So right over here, we've input this into the T accounts. I'm going to stop the video here. We're going to do another video just momentarily where we're going to be going through and actually then determining cost of goods manufactured and cost of goods sold. I want to thank you for being here today. Please leave any questions that you might have below and appreciate you liking and subscribing to these videos. I look forward to seeing you on the next video. Have a great day.